Rolling over into crypto real fast, taking a first brief look at metal. Metal being one of the assets that has recently reacted to the dark pools that we have given in our private community well in advance to the absolute T. So coming over here, I said to you guys back on February 22nd, and this is again, it's not to toot our own horn, it's just to show you all that you're part of a community that generates a level of accuracy that most retail traders will never come across because they're focused on the wrong thing. Back on February 22nd, 2026, we sent out the metal buy dark pools inside the private Discord via our institutional software. Anyone who respected those levels and positioned accordingly is now sitting up around 50% on their investment. This is why understanding institutional liquidity, dark pool positioning matters. While most people chase candles after the move already happens, our members are watching the levels in advance. So as of now, price is approaching the 16,937 cent psychological level dark pool. If buyers can break through this and sustain above this area, it could open the door for a continuation move into the higher sell dark pools between 18 and 21 cents. At the same time, risk management still remains important. If sellers passively defend this level, we could see rejection back into lower level buy dark pools around the 13,838 before buyers attempt another push higher. Dark pool to dark pool, level to level, no guessing, no hype, just institutional data and real liquidity insights. We are the only community and group that offers retail traders access to this kind of information. And so here you can see in the screenshot, Scalper delivered this message to you all on the 22nd of February, 2026. If you go back into the Discord and you go and check out the metal and XPR section up here in the monthly member area, and you can see right here, this is that message, and you can see that metal was trading at the 11 cent 555 dark pool, almost to the absolute pip. It had recently just touched it. If we come over to the charts, we can see the 11,555 dark pool back in February had a beautiful reaction to that. We then created a delta held pattern where you can see a low was taken here. From that low being taken, a new high was created in comparison to the previous low. Give me a second. I don't know why my computer's doing that. The market made a new high in comparison to the previous lower high from when the low was taken. And we started to create a delta held. A low, a new high formed in the market. So now we have a new A to B move or a new base that was created here. Here's your 1. Here's your 2. And the retest of the base was the 3. And you can see the retest of that base wicked straight down into the 11.55 dark pool. And now we are currently trading up at the 16,937 cent dark pool to the almost pip. So what I was saying in the update given to you guys, because I am a very big bag holder of metal, is paying very close attention to this price action. If we want to see price trade higher, we need to see buyers continue to push with large amounts of buy volume and trap sell volume above the 16,937. In the form of technical analysis, what that will likely look like is, again, some form of a delta held pattern, whether it's we use this as a base or we break higher, leaving behind a base underneath of the dark pool to create a new structure leg to the upside, and then retest that base, turning the 16,937 into a support, trapping sellers, buyers becoming aggressive and possibly taking price higher. So bullish scenario that I would like to see would be a continuation move higher, where we break above the 16,937, we see some sell squeeze above previous areas of interest where sellers are likely defending. And then we see a retest of the 16,937, turning it into support to then take price higher. Or we see sellers defend current price action and the current dark pool. We push back down into the most recent base, defend, and then push higher as our bearish scenario to bullish scenario, number 2. And then the last scenario or the last line in the sand this week for buyers to remain in control would be priced to come back down into the 13,838 dark pool to see buyers defend, to create a delta held, and then trail higher. That would be the least scenario that I would like to see. I would prefer to see the breakout and the continuation move, but this still remains on the table as a possible bullish move, even though short term, it would allow us to reposition at lower level dark pools at the 13,838. So these are the three scenarios that I'm watching for this week on metal. Inversely, if we see the opposite of that, the last line in the sand for me right now is the 13,838. If we break beneath that dark pool, then I'm going to start to shift my bias and expect that most likely sentiment is worsened at that point in time. And if we break beneath the 13,838, I'm going to be watching to see how buyers react to these lower levels. If we cannot start to break bullish back above it, how sellers react at defending their previous highs, and does that unfold into lower level prices on metal. All right. So right now, very interesting to see, considering that we are trading at and around a dark pool at the 16,937, how price action reacts. If these sellers over here that became aggressive before can passively defend against the buyers, trap them, and keep price suppressed beneath, or if buyers gain enough momentum, especially if optimism flips in favor of risk sentiment and we can see price trade above. To the upside, right now, I always mention that I only have the most top three prevalent dark pools on my charts. So the next three to the upside, the highest price comes in at the 21-cent psych level. But make sure that you guys go inside the Discord if you're monthly members, because there are and have been some updates since all the way back in February on these dark pools that Scalper has given right here. So there are some new updated levels for you all to be mindful of. All right. And these are looking very juicy if we were to see a break above the most local dark pools. But level to level, we'll pay attention to those in later updates to see how the week progresses. As for other assets that we are mindful of and pay attention to, Canton, same update as before. We're still trading above the 14,801 dark pool. As I mentioned in our previous update, that's going to be our last line in the sand for buyers. If we can see price hold above the 14,801 and break above this passive seller that has been defending the 17-cent psych level for some time now, where you can see before we broke beneath it, it started to act as a resistance here for the first time at the beginning of February. Buyers defended the 14,801. We came straight back up into 17 cents, and that passive seller trapped buyers and pushed price all the way back down into lower level buy dark pools. From the lower level buy dark pools at the 13,916, where did we come all the way back up into in April? Straight up into 17 cents. So that passive seller is still sitting there. Then from there, they defended, pushed price back down into the dark pool. You can see again, buyers defended the 14,801. That puts us local to where we're currently at now. In May, you can see that 17 cents, again, there was a passive seller stopping buyers from pushing price higher above that 17-cent level. Where did sellers, after trapping buyers, push price down into to the freaking pip? 14,801. And now, yet again, we are trading near that 17-cent level. So I'm going to go out right and say that if and when we do, because I don't know when, but I know that it will be at some point in time, we see buyers prevail above this 17-cent threshold, we are probably going to see a huge sell squeeze. We are probably going to see, because think about it, if buyers didn't have enough momentum with this volume, with this volume, and with this volume, and now what we're currently seeing to break above 17 cents, whenever it does happen, it's probably going to be a large enough buy volume to engulf all of these highs. Our next hurdle above that is going to be 18,194. If we can break above 18,194, we're probably going to see price trade up into these highs. I would go out right and say that if they attack the highs at 17 cents, they're not going to leave these ones behind. That would then open the door for the next higher sell delta at around 21 cents on Canton. So to the upside, if we break above 18,194, the next first bullish target that we're going to be mindful of for possible profit taking is going to be the 21-cent region. Above 21 cents to the upside, we have 24 cents as our next target. And there was a sell dark pool that popped up at around 29 cents in an extreme bullish environment scenario. To the downside, Canton's price has been holding relatively well at around 14,801 to 13,916. If we see a pullback because of sellers defending at the 17-cent region, I will definitely start to accumulate some more in these areas. Worst case scenario, we break below 13,916, which is the current last line in the sand. 1236 and 1102 do become prevalent targets for possible buy orders if we see sentiment worsen. As for XRP, like I've been mentioning, I kind of been leaving it alone. It's been pretty boring. Same analysis as before. As long as we trade above $1.27, which is the last line in the sand, I expect higher prices on XRP. So same level to level updates. None of these dark pools or deltas have changed. We need to see price trade above $1.54 before we get excited. If we can see price above $1.54, then that opens the door for a medium valuation of around $1.62 to a high end target before sellers show their hand of around $1.98. Pretty far away from where we're currently trading now. There are some levels that we need to overcome in between $1.54 and those higher levels first. To the downside, as I mentioned, those targets have not changed. Below $1.27, I would go outright and assume that they're not just going to stop at targeting these lows. It's probably going to be some substantiating event. Think about it logically, right? I always like to approach things logically here with you guys, as well as sound institutional technical analysis using these dark pools. But let's think about it, right? We look at price action. So we see what happened. This was the beginning of February with the massive liquidation event that took place. Mid-February to end of February was the whole flare up with Iran and the United States, and that wasn't even enough to break $1.27. Then we have the reigniting of all the fears, the tensions, and the escalations continue to ongo and push price down back into $1.27. That wasn't enough to break it. So if we do see an event that creates a cascading anomaly of risk-off sentiment that does allow for price to break $1.27, I'm going to go outright and assume that they're not going to stop at liquidating just these lows. They're probably going to hunt these ones as well. And we're probably going to see a buy squeeze that results in a much deeper spike beneath these levels in terms of XRP's price. So the first bearish target that I have on my radar buying below $1 is going to be that 91-cent dark pool. There are some levels to the downside on our radar below 91 cents, but those are reserved for the monthly members. So make sure that you guys go into the dark pool section in XRP and get those updates. I personally have some buy orders on lower levels that Scalper has been talking about in these dark pool updates on my charts, just in case. You guys can see those here. I'll give you a brief little sneak peek, right? All right, so just make sure you guys are setting alerts and alarms and monitoring those. Outside of that, just real fast, this was a very interesting announcement in regards to Canton. This was posted today, May 24th. Somebody had posted, I don't remember off the top of my head who had shared this in the chat. I think it was Tony. May 24th, 2026, Grayscale tells institutions which 4 chains to back when Clarity Act passes. And ETH, Solana, BNB, and Canton were mentioned in the stack. Here that message is from Grayscale themselves, May 22nd, just a couple days ago, 2026. So this was put out on Friday. Expected regulatory changes, including the Clarity Act and guidance from the SEC, will likely unlock blockchain use cases like tokenized assets and decentralized finance or DeFi. This rising tide could eventually lift all boats across the digital asset industry. I like that they didn't leave anything out. They mentioned all boats across the digital asset industry. But for the time being, a smaller number of blockchains dominate this activity, including Ethereum, Solana, BNB, and Canton Network. Institutional capital will likely target these networks first in our view, which is huge for us because a lot of us are Canton bulls. So I liked seeing that in the headlines. That was cool. That gave me some optimism. Hopefully we can see some progress on the Clarity Act passing and coming fully into fruition in the coming days ahead. I'm also a quant bull. So this was put out into our private community, and this was very interesting to see in regards to some quant updates. This is back from April 2026, and I just want to read a couple of highlights for you guys, as quant is one of my biggest holdings. I enjoyed reading thoroughly through this. So quant, and the document reads, Unlocking Collateral Mobility, How Tokenization Transforms Settlement Infrastructure. What I like about this is if you come down here in this page, it's actually interesting because Quant directly mentions Canton Network in their own document. So it says here, this shift has become critical as industry margin evolves from exceptional to routine. Firms need settlement infrastructure that fires immediately when margin requirements change, freed from batch cycles that govern legacy systems. Tokenization provides the rails for this capability. Then up here it says, as industry momentum builds across multiple fronts, the Canton Network has delivered working end-to-end margin workflows using tokenized collateral as confirmed by a series of industry collaborations throughout 2025 and early 2026. So I just think it's interesting that another network is directly talking about Canton, and a network as big as Quant doing as big of things as Quant has been doing, you know, that they have just the, I don't even know what to call it, the non-biased mindset to actually mention another network in their own document. So I thought that that was cool as a highlight to mention to you all. But nonetheless, going over and just reading some of these quick highlights. It says here, Quant operates as the orchestration layer between existing systems and digital asset platforms. The architecture is designed for incremental adoption. So this again feeds into the it's not going to happen overnight narrative, but it is happening. As we progress, it says tokenization will transform collateral management. The technology works, the business case is clear, and industry adoption is growing. Success depends on having infrastructure that connects traditional collateral optimization with the practical complexity of digital settlement. Solving the orchestration challenge early matters as the industry moves towards more dynamic risk calculation and real time settlement. Firms with the right infrastructure already in place will pull ahead while others remain constrained by legacy systems. So I highlighted that because, again, coming from a retail perspective, think about it. If an organization is prospering and benefiting from quants technology or blockchain tech in general, then another organization that isn't using is going to fall behind. And what is that going to do? That is going to lead to mass adoption because industry leading experts and large enterprises institutions aren't going to want to fall behind. So it's going to lead eventually to this cascading event, a snowball effect almost in a sense, where if one institution is using it and benefiting from it, then the other ones are going to need to adopt it as well. So we are at the early innings of this taking place, and it says Quant's programmable settlement infrastructure provides that foundation, connecting the benefits of tokenized collateral with the operational reality of a multi-rail digital settlement at production scale. Last but not least, it says Quant's programmable settlement infrastructure provides the operational foundation to take tokenized collateral from proof of concept to daily production. So I liked reading thoroughly through this little tiny quant piece. None of this is financial advice. I'm not telling you guys to go out there and buy Canton. I'm not telling you guys to go out there and buy metal or XRP or quants. Always do your own research and your own due diligence. Outside of that, though, that's all that I have for you all. Enjoy your upcoming week.